Joining us now is financial expert Terry Savage. Terry, give people an idea. People want to know, what is the long game here in the president's mind? Is it seeing how much we can handle in the short term for the long-term benefit? Talk about the strategy here.
Well, I really can't get inside the president's mind, but I can tell you how this is going to impact you. Just a moments ago, the European Union announced its own retaliatory tariffs. And when you look at the stock market, does it look like you're waiting for the lottery numbers? It was trading the futures down 400 points, now opening down less than 200 points, but that's going to swing wildly. Robin, yesterday when I said, fasten your seatbelt, this is just starting, you looked at me and said, oh no, it looks like the market was opening up. It was up, and then it was down a lot. Let me give you 3 ways that we haven't thought about this beyond Lululemon or your Apple phone costing more because of tariffs. So let's start with the tariffs the Chinese just put on. Well, we buy a lot more from them. That's absolutely true. What do we sell to them? One of our biggest exports is soybeans. American farmers sell soybeans to China, and that for amounts to $13 billion. And Illinois is the largest soybean exporter. And what's China going to do? Just what they did back in 2016. They're going to go to Brazil. Other countries grow soybeans. Our farmers will lose those markets. Their banks will have to call their loans if they can't make their notes that they have on their farm equipment. So we're going to see impact throughout our economy. It's not just you buying expensive Nikes. Now, speaking of what consumers buy that will be impacted by these tariffs, there's the obvious stuff, what we get from China. But you would be shocked to know how much of our pharmaceutical supply we get from China. 90% of ibuprofen, 70% of acetaminophen that we import comes from China, not to mention tons of generic drugs. So if there's a tariff on those things, you're going to notice it when you go to refill. Hey, here's my financial advice. Go refill the prescription for your generic statin, your generic blood pressure medicine. What do you want to stock up on this time? It's not toilet paper. It's Tylenol. Okay.
So, Terry, let me ask you, what's the Fed thinking right now in terms of interest rates when they have to make that decision in a couple of weeks?
I'm so glad you asked that, Larry. Here's the question. We sell China stuff, and we get stuff. I mean, we buy stuff from China, and we pay for it with what? With pieces of paper. Dollar bills. Well, not paper dollars going by plane, but credits in the banking system. China has accumulated a huge surplus of dollars. What do they do with those dollars? They've been helping us finance our national debt. They buy treasury bills, notes, and bonds. And all of a sudden, it looks like by the way, they're the second largest foreign holder of our debt. Japan holds $1 trillion. China owns $750 billion of our debt. What's going on in the bond market, which we never talk about today, is really strange. There are rumors that as part of its retaliation, not only will China not buy our debt, but may be selling some of our debt. Now, you don't trade bonds, but here's the fact. When the United States wants to borrow money, if there's lots of buyers out there, they can pay a low interest rate. Today, they're having an auction, a regularly scheduled auction of 10-year Treasury notes. And the rate on those spiked. The market trading rate was under 4%. Overnight, it got up to 4.5%. That's a huge move on word that maybe the Chinese retaliation would include, hey, we're not buying your debt. We've got these dollars. We're going to dump them. We'll buy euros. We'll buy gold, whatever they might buy. So this is very interconnected.
Terry, all that to say what? Interest rates are going up, you think?
Well, usually if you were going to have a recession caused by tariffs, you'd think rates would go down. But now, not only do we have the fear of inflation, which would bring higher rates, we have the fear of how do we sell our debt? We have to offer higher rates to finance our deficit. So you started out by asking the strategy. And I'm saying to you, I'm not terribly sure they thought through this whole thing. Yes, Robin, you're absolutely right. The goal is to take pain now of a recession early in administration to ultimately, quote, get to the goal of bringing manufacturing back. But the consequences, the stuff you see and I see, whether it's your Tylenol or whether it's your, we have a lot of farmers watch our station. They're going to be widespread throughout the economy, and the stock market will reflect that, which is again why you need some comfortable safety so that you're not whipsawed in this stock market, which means you put some chicken money on the side.
All right,
come back to the start.
Terry, thanks so much for joining us. You can go to terrysavage.com for more.